Good morning and welcome in. I'm Rhonda Holt with Thrive Mortgage. I'm the loan maven, and so we are here talking about all things mortgage, and that's what we talk about every week. And I hope you listen in. And also, I wanted to remind everyone that if you have a question about a mortgage, feel free to reach out to me. You can call me at 434-221-6361. If we use your question on the air, we'll send you one of our Loan Maven gifts, and we would love to announce that question on the air. And also tune in if you miss a show every week. You can tune into tunes. We're out there on YouTube, and our videos are posted. My channel is the Loan Maven. And I know we had some followers message me last week on YouTube, and thank you for following us there. So please subscribe and follow. We would love to have you tune in to us when we post a new video. So today's topic is going to be about FHA loans. And FHA, the Federal Housing Administration, those loans have been around for a very long time. I know since I can remember, since I started back in banking in 1987 when I was 2,
Right.
when I started back in banking, I remember FHA loans, and pretty much, it used to be there have been other types of loans, but, conventional loans and FHA have kind of been the mainstream for many, many years. USDA came about, VA, the Veterans Administration, came about. But FHA loans, if we're looking at some recent statistics that I looked at, it said that 83% of all FHA borrowers are first-time home buyers, according to the FHA annual report. And I was looking at some numbers that they had put out there. It's the largest source of affordable financing for first-time home buyers. Do you remember, Mary, when you got your house, what type of loan you got?
I don't. I think I got one. It was like the bigger loan and then the smaller.
Yeah,
loan.
like an 80-20 loan,
Yes.
like they used to have.
Yeah.
Like 80% loan and 20% loan. Yeah, I get that. And I was trying to remember too, and I'm thinking that it may have been conventional, but who knows? It could have been FHA because that's an easy way to get a loan. Also, I did look at some numbers compared to the rest of the market. That 83%, obviously, the rest of those loans are other things like conventional, VA, USDA, combination of different loans. And FHA, I would say, out of all the loans we do, and we have many, many products that we offer and some that other lenders do not, but FHA is probably the easiest loan to get if you have credit issues. And on an FHA loan, we go down to a 580 credit score, which that is super low. And so if you are a person that, let's just say, has fairly new credit, or maybe you've had some dings in your credit and you were trying to get your credit back up to where it needed to be, just kind of revamping some things, starting over through a situation or whatever it may be, this might be the loan for you. And there are many versions of FHA, I should say, but the one we're talking today about is the standard FHA loan. And you would have a down payment of that particular loan of 3.5%. So if, when you say, if you were looking at a $100,000 loan, 3.5% is $3,500. So that is what your down payment has to be. And now we have other programs, and I'm not going to talk about those today. We'll talk about those probably next week, but there are other programs that you can do in conjunction or that uses FHA that has some down payment assistance. But today we're talking about the standard FHA loan with 3.5%. And we do definitely, if you have a score between 580 and say 610, 620, you're definitely going to be looking, 580 to 600, you're definitely going to be looking at the 3.5% down payment. And that can come from many sources. So I would say if you were looking at, if you start saving some money, put from your paycheck, from tax refund. People are getting tax refunds coming in right now. If you were to save that tax refund, that would be a good source. If you just over time save some money, and remember, when you're saving money for a down payment or closing costs, remember, can't keep money at home in a safe. You can't keep money in the mattress. You've got to have that money in the bank. You've got to have it seasoned. You know, I do talk to a lot of folks. It's surprising how many folks we talk to that will say, well, I've got money. And I said, well, where is it? And is it, you know, what bank do you, and well, it's, you know, I keep it in, you know, safe here at the house. And I was like, no, you've got to have that money in the bank. It has to be seasoned. Now, what I will tell them to do is go ahead and put that money in the bank, and let's let it season for 60 days because it has to show, you know, being in a bank account. So keep that in mind. You can't put it away. And plus, you know, with some of these companies out here right now, savings rates, interest rates are going up. So you can earn a little money on that money. So if, you know, if you put some in checking, very little, and have some in a savings account, you can earn a little bit of interest nowadays. So I would say make sure the money is in the bank, save it, i.e., you could have it from a recent tax refund and so forth. So, and also I just wanted to let you know that you can get the down payment from a gift from a relative, domestic partner, or a long-term friend. So you could do that. They just came out with new guidelines around that. Domestic partners when they added. So, and when I say long-term friend, we would have to be able to justify, you would have to give a letter of explanation as to who is this long-term friend. You know, I've known him since kindergarten or whatever. That's great. But if you just met him last week, that's not a long-term friend. Right. So keep that in mind, you know, that down payment. Now, if you were to get the down payment of the 3.5% from a relative, long-term friend, domestic partner, we would have to verify where that money's coming from. So we will ask for a bank statement, a 30-day recent bank statement from that person. So we would tell you that this is what we need, and go ahead and prep them. Go ahead and I'll say, Mary, thank you for giving me that money, you know, being able to gift me the down payment, but I'm going to need your 30-day bank statement. And Mary says, no, I'm not going to give you my 30-day bank statement. Now, they don't have to give you that 30-day bank statement directly. They can securely send it to me directly if they don't want you to have had that happen, if they don't want you to see it or whatever. But I've got to have that. And you can't put blackout marks on it. You can't like black out your account number or black out.
Redacted. Okay.
You can't do anything altering the statement. So I need it intact. And we're going to show that you actually have the money in the account. It could be multiple accounts. That gift or that donor can show us that. And plus that gift or donor is going to sign a gift letter. Okay. So they're going to sign it, as well as our borrower is going to sign that gift letter. And it's just going to say that they're going to give you the money. They're giving you the money without expecting you to pay it back. Now, if you pay it back to them outside of closing or whatever, that's fine. That's up to you. But they're going to say they're going to give it to you as a gift. That's a gift. So there you go. You got your 3.5% down. And with the FHA loan, you can go up to a loan amount of $472,030 in this area. So that just recently went up for a 1 unit. If you buy 2 units, 3 units, 4 units, and so forth, those loan limits do get larger. So talk about some things that go into that. You know, we will look at credit, obviously. Minimum score, 580. We will look at income and employment history. We're going to look at, you know, if you're a W-2 employee or salaried or hourly employee, we're going to want pay stubs and W-2s. We're going to try to verify a 2-year history of solid employment in the same line of work. Hopefully, it doesn't have to be, but hopefully. You're going to be occupying that home for sure as your primary residence. It cannot be an investment property. You can get FHA. You can't buy it as a second home. as FHA or anything like that.
But you said you can have 2 units,
You can have 2 units.
so you could live in one and
Live in
have the
one
other.
and have
Okay.
the other. So
Mhm.
that's a good, yeah. So you could actually buy a 2-unit FHA and rent out the other side. What a deal is that?
Mhm.
Find your duplex,
Mhm.
you know, 3 units, same thing, you know.
Mhm.
So, and we just had someone recently do that, and it really saves them a lot of money in the long run. But I would say it has to be primary residence. We do look at the employment history. We do look at income. If you're self-employed, we need at least 2 full years of that. And, you know, when we're getting into that, the credit and so forth, I'm going to really dig in there to see if we can get you approved for the FHA, but it is the most easiest program to get qualified for. We're going to go to break. And when we go to break, we're going to, when we come back, we're going to talk about more about the FHA financing and how we can get you in a new home. We go down to a 580 credit score with those, and I'm looking at we're talking about the standard FHA loan right now with 3.5% down payment, and you can get that down payment from a gift from a relative, domestic partner, or long-term friend, or you can try and save the gift, you know, from tax refunds, whatever, just try to save it. I think that the rates versus an FHA loan with some of these down payment assistance programs are much, much better. They're still relatively low on these FHA programs. And matter of fact, just recently, the mortgage insurance premium to make it more affordable for home buyers, that was just reduced by 0.30%. So, for example, when you had, and that, I mean, really, that's significant. It's the factor on mortgage insurance used to be 0.85, or like if you were looking at $100,000 loan, so you'd be looking at like 850, and I don't have a calculator in front of me, but yearly premium divided by 12 and so forth. But now it's only 0.55 cents, and that would be 0.55% would go into the factoring of your mortgage insurance. So it makes it a lot more affordable. One thing I will tell you, if you're out there and you've been denied for some reason recently by an FHA loan with a lender, we might want to give it another shot, because maybe you were denied because of debt versus income. Since they lowered these FHA premiums now, it might make it affordable for you. So we might want to revisit that. You know, that's something we're looking into, all of our folks that maybe had a debt versus income situation, and calling those folks back and letting them know that this has happened. So we've been talking about FHA loans and how to get an FHA loan. It is the easiest, I think. One thing I will tell you, you know, you do need to make sure that when you're buying the home, you need to look at the home itself. Any type of government loan, FHA loan, USD, VA loan, all of those government loans are going to require some more, I say, stricter things for the property to be in compliant with an FHA appraisal, with a government appraisal. The appraiser, once you get a contract, once you've signed initially everything, we're going to order an appraisal. An appraiser is going to go in and appraise that property, and they're going to look for specific things such as severe structural damage, leakages, dampness, decay, possible termite damage, those types of things. They're going to, if they pick up on any of that, any health hazards wrong with the house, then they're going to note them on their appraisal report. And these might not be things you might find in a home inspection, or it may have been brought up in a home inspection. But if this appraiser notes it on this appraisal report, that means that it's going to have to be fixed before you can get this house, before you can close on this loan to get this house. That's going to be a requirement. Things that I've seen in the past from appraisals where people have done a government loan, such as leaking roof, broken windows, peeling paint. And the peeling paint now can be on any structure that's on the property. I even saw a few years back where there was a swing set on the property, and the swing set was all rusted and it had peeling paint all over it. Well, the appraiser noted it, and what has to happen then is either they've got to scrape and paint that swing set, or they've got to totally remove it.
Why the peeling paint? Is it because it might have lead in
Lead.
it? Okay. Okay.
Lead is a health hazard.
Okay.
Now, if you have peeling paint inside on the walls, of course, that can be a health hazard. If it's no peeling paint, it's been painted, you know, you're going to sign a lead-based paint disclosure with your purchase agreement and so forth. But if there's any peeling paint, they're going to want it scraped fully and painted. And if you have any shed that's out back of the property, the shed is going to have to be scraped and painted, or if it's rotten or if it's falling apart, it's going to have to be removed. It's going to have to be torn down before we can close on that loan. It's not going to happen. So I would just be leery of that. That's probably a very common question that I get. I'll have clients that I've pre-approved, and they'll send me a picture, text me a picture, and they'll say, will this house work? And I'll take a look at it online. Of course, pictures you can't always tell, but you can sometimes tell what's out back, some pictures. But, you know, and I be able to tell them up front, and I'll say, well, look, I said this right here, the porch is missing a railing. That type of thing is going to have to be fixed. I can see the porch is going to have to be scraped and painted. Now, if the seller is willing to do those things with an FHA loan, a government loan, then you're fine. If they're willing to fix it, not a problem. They fix it. The appraiser comes back out and re-inspects it to make sure everything has been done that was on his list. And then we close on the loan and get your home. But if the seller's not willing to fix it, my advice to you as a home buyer would be, you don't need to be fixing somebody's house that you don't own yet. Right. Now, does it happen? It probably happens.
Like if they just love the house so much.
They just love the house so much. They might, with the seller's permission, they might go out there, and the realtor's permission, they might go out there and try to fix it. I just don't advise it because you do not own that property. You're putting money and effort into something that you do not own yet. But has it been done? Yeah, it probably has been done. I would say that if you see a listing out there, Zillow listing or whatever, where it says for example, this property is sold as is. Well, that's your first indication. If it's sold as is, the seller's not going to be willing to fix anything. So can you still make it happen? Yeah, you could possibly make it happen. You know, you're going to have to talk to the realtor and get in there. But some common things that the appraiser is going to look for. It must have an undamaged exterior foundation and roof. Must have safe and reasonable property access. You know, you can't, you know, you've got to, like, if you have to go across somebody else's property to get to it, do you have an easement that's been recorded? Must not contain loose wiring, exposed electrical systems. Must have relevant utilities, gas, electric, water, sewage functioning properly, because the appraisers do check to make sure the water is running, make sure that the heat is on, the air conditioning works if it has air conditioning. They're going to make sure all that's there. And we've had situations where the appraiser goes out and people are not living in the house, never got to turn it back on, or they turned it off and didn't tell anybody. Must have surfaces free of chipping and peeling paint. Must have adequate access to attic spaces and natural ventilation in crawl spaces. Must have access to potable water. You gotta have water. You can't go to the little Johnny house back. Must be free from wood-destroying insects and infestations. And most of the time we get a termite inspection. That's going to probably determine that. Must not have interior and exterior health and safety hazards, such as missing handrails like we talked about, or steep staircases with no handrails, that sort of thing. And must be a marketable property. And I would say marketable meaning that, you know, it's not one of these properties where you have to go in and just totally redo it. It's just not going to work. A fixer-upper, it's just not going to work for a government loan. You know, those are nice and you find a good deal, but it's not going to work. I would say that with all that kept in mind, you can really still get some good properties out there. There are still great properties to find. And once you're pre-approved and know the amount that you're pre-approved for on the FHA, and let's say you have a 580 credit score, but you have your 3.5% down payment. I'm working with a few folks now that have that. And you could, if you do not have extra money in the bank, you could ask the seller to pay the closing cost. So, have it worked out with your realtor that, you might ask over and above the list price to get the seller to pay the closing cost. But the seller can pay up to 6% of your closing cost. And in this market, typically, unless it's a really high-priced house, based on our average, it's going to definitely cover the closing cost. So I would say, if you got your down payment on this regular FHA, you've got it made. Things up front, you'll just have to have an appraisal fee. If you get your home inspected, you'll have that fee. Home inspections run about $375, $425. Appraisals run about $650 in this area for the FHA. So really, you can get into a house even if you've got some things in your credit. Bankruptcies is another thing they do allow. So this program is probably the most lenient on bankruptcies. So as long as you reestablish credit, you could get into a house with this. So I would say it's a wonderful program to get into with the FHA. And we're going to actually talk about next week, we're going to kind of talk about the down payment assistant grants, where you can get piggyback with the FHA loans and get some down payment assistance. Those rates are a little bit higher, but we're going to talk about that next week. So if anything here we've talked about interests you, you can always reach out to us at theloanmaven.com. That's our website. You can actually go in and fill out some information, apply now. It's not saying you have to get a loan, but that allows us to be able to look at your situation to determine whether or not you qualify for a mortgage. And we'll reach back out to you usually within 24 hours to say, hey, this is what we've got, this is what we need. And so, or you can reach me directly by phone at 434-221-6361. So, fun fact for the day. Homes, Mary, you probably didn't know this. This is a funny one. Homes with black front doors sell more or for a higher price than any other house.
Really?
Yes. Now, I would say that this is a recent statistic that they looked at in 2022, and I don't know who just figures this out.
Yeah, who counts?
Okay, this door had it. Well, mine wouldn't probably qualify. It's close. It's gray.
Okay.
What color is your door?
It's like a blue-gray.
Okay. Mm-hmm. They said a black front door is usually associated with the highest asking price. A recent Zillow survey, a home with a black front door sells up to $6,449 more. I don't know how they come up. Then, while a slate blue front door comes in a close second. Slate blue. How about that? You have been listening to, isn't that funny? You've been listening to Rhonda Holt here, the Loan Maven with Thrive Mortgage. And we talk every Saturday about all things mortgage. And next week, we're going to talk about down payment assistance. And we're going to have a special realtor guest on our show next week. So hope you all have a great week. And don't forget to call us if we can help at 434-221-6361. Or visit my website at theloanmaven.com.